Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The bullish momentum for the Australian dollar holds for 3 consecutive days and now pushes closer to a 5-month high and towards its target of 67.45 as its rival, the US dollar index, slipped to 105.10. Global markets were relatively quiet though, as traders unwind for the holiday shortened session in observance of the US Independence Day. The US market will resume normally on Friday when the Labour Department releases the June employment report, or the non-farm payrolls, with the forecast expecting a slowdown in hiring to around 191,000 jobs added in June from 272,000 jobs added in May. Looking at the technicals, although we are somewhat overbought, the trend is supporting the upside case since the posted hammer, and a break above 67.45 would open way the path towards the region of 67.85 and maybe on to 68.35.50, where profit taking may emerge. The euro managed to break into the 108 territory overnight as trading volumes remain thin due to the US session being out. Nevertheless, with the market now close to its objective, seen around 108.30.40, may see an extension on towards its topside target that I've been waiting for, which is at 109, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped to 105.10 and still has potentially further weakness to come and may see a target around 104, figure 20. Any pullback is likely to be limited. However, the immediate support is seen at 107.30.40 and with the bullish opportunity holding beneath there around 106.70.75. The fragile Japanese yen remains near a 38-year low against the US dollar, though weakness is gradually setting in, as we can see due to thin liquidity, could see a further slide since the break of this trend and look towards a target of 160.2025. A break there could give further weakness and look towards this broad uptrend, which comes in somewhere around 158, figure 50. Reassess from there just in case we see some profit taking, but with technicals falling rather sharply, does support further weakness and there is cracks forming in the trend as the ADX is now holding to a ranging market. The British pound holds steady into its third consecutive bull run, and with the market now waiting for the results from the UK election, and there is further momentum expected from the bull case, and maybe even see a push on towards the region of 128.5 to 129. Any pullback anticipates support around 127.10 and a firmer case around 126.5. Since breaking above 2,342, spot gold holds steady and now expects further gains as the ADX is bullish and both the RSI and the MACD is married to a positive case. Looking to the upside, we could see a target around 2,362 to 66 or even on towards 2,380 and reassess from there. Looking ahead though, attention next week will shift to the US CPI and the PPI reports and Fed Chairman Powell's testimony on the semi-annual monetary policy report before the Senate Banking Committee in Washington, D.C. So no doubt we've still got plenty more action to come and no doubt gold should hold steady to its positive bias. Wrapping up with oil, we can see the market is nudged slightly higher in thin trade, but still a little bit cautious due to the fact there is bearish divergence seen from the RSI and from the MACD, and therefore could see a downturn back towards $82 a barrel or possibly lower down towards this region around $80 a barrel and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.